Well, if you're watching us online, welcome here. We're going to be talking about Chapter 10, and Chapter 10 is about responding to fraud risks. So, fraud risks. Talk over here so you can kind of see me. Okay. So, there. So, as we talk about fraud risks today, we're going to bear in mind that auditors always need to be thinking about fraud throughout the audit. Really being human nature, the risk is always present. We'll be talking today about various fraud risks we need to assess as auditors, both at the overall assertion level, so in other words, with the overall financial statements, surveying every single account. On the other hand, we'll also talk about fraud risks at the individual assertion level. So in other words, an individual account. Some accounts are much more likely to have fraud than others. For example, cash, well, very high inherent risk. If we have no internal control, I guarantee 100% risk that some cash will be missing. On the other hand, an account like land, not very high fraud risk at all. So we'll be approaching that from both sides. And I think you'll find the chapter to be quite understandable and really quite interesting. Fraud always is too. And then if you do want to take the MAC, I hope you will, you'll have me for the fraud examination course if you elect to take that as one of your 10 hours of MAC electives. So with that in mind, let me start sharing my screen here and pulling up the Chapter 10 handout. Right here, excuse me, about assessing and responding to fraud risks. So let's think about some kind of overall conditions regarding fraud just to start us off in the chapter. So conditions for fraud. Well, first of all, let's just kind of see what fraud is. Well, fraud is any intentional deceit that's meant to deprive another party of its property or its rights, including, of course, the right to ownership of assets. But it could also be something else. For example, if we thought about management fraud, that is depriving stockholders and creditors, and for that matter, other parties too, of their right to know fair and unbiased information about the client, the risk financials. Of course, in the end, it's going to lower the stock price too and make that entity a greater credit risk. Well, in accounting, fraud can involve fraudulent financial reporting or misappropriation of assets. Now, we've seen those terms before. Fraudulent financial reporting is usually going to be something that an individual employee would be interested in committing, including at the lower level. So we can even resort to an employee stealing some inventory or stealing some cash out of the cash register, although it could be bigger than that. But it does involve stealing something directly. Now, on the other hand, if we talk about fraudulent financial reporting, we usually call that management fraud too, because it tends to be committed at a higher level of management. That's because management needs to override some internal controls and in the end, misstate those financial statements. Doing so, of course, to make them look better, so assets, revenues, and gains are overstated, and liabilities, expenses, and losses are understated. Very common pattern. Plus, it might involve misstating some disclosure information that should be there. And management fraud, generally much harder for the auditor to figure out because it's concealed sometimes in a very, very sophisticated way. Well, then B, I'd like for us to look at something called the fraud triangle. It was conceptualized by Donald Cressy. He was a famous criminologist. So he was not an accountant, he was a criminologist, but he came out with a study about so-called fraud triangle. And what it's going to do is state that 3 factors are always present whenever fraud's committed. So if we look at this fraud triangle, I'll get to my lights. And guess what? No magic marker. Let me run and get one. I'll be right back. Another match right upstairs and around here. There we go. I'm back. So let me go ahead and come back live here. And I apologize there if you're online. My video did not start earlier. Okay. So as we think about this so-called fraud triangle, I'm going to show you what it looks like. So just portioning my board space. Really is like a triangle. And it's a good visualization of what's going on. Whenever there's fraud. So, very first thing is there's some pressure or incentive to commit a fraud. So, there's always some reason why someone commits fraud. Well, we've discussed some of those reasons before, and some are kind of embarrassing, but does anybody recall some of the reasons, some of the pressures or incentives to commit fraud? Right back here, speculate. Yes, very much so. Financial gain. Yeah, financial gain. So that sure is very big pressure incentive to commit fraud. And around here, they're just not paying me enough. They should pay me a lot more. Or maybe, well, the markets have dropped a lot here in the past few months. I need to make up for that. It really hit my portfolio. Or it could be just high living. Wanting to live an extravagant lifestyle. Or some people might say they just want to live high on the hog. Could be that. It could be that they have a business on the side to finance. Or maybe their spouse has business or child. Or their child is in having financial problems, maybe they are too. So here's a way to maybe help pay some debts. So sure could be those things. Some people just are addicted to money and want more money, to tell you the truth. So those financial incentives sure are big. And along with those financial incentives, well, I mentioned some of the underlying reasons for those financial incentives, but what might be some of the other reasons we would see that somebody commits fraud? From earlier. Some type of addiction. So it could be drug addiction, alcohol addiction. It could be gambling addiction. It's actually quite common. For example, several years ago, the former state auditor in my hometown, Indiana, told me that he had asked the state auditors when they came in one year, what was the strangest fraud that you ever saw? And they said it was this. It was a librarian in a small branch library in suburban Indianapolis. Well, they said she looked just like the typical part, you know, glasses, etc. Well, I guess sort of like accountants are stereotyped to look, you know, like nerds. So they said that she was quiet and been there for years, not someone you would suspect. But what she was doing was this. She was taking book reacquisition funds that have been allocated to that library. So in other words, to replace an outdated book or an outdated subscription. So she deliberately picked out ones that people didn't really go for. They were not looked at by subscribers very much. And of course, a lot of things in libraries aren't, to tell you the truth. Libraries must feel as though they spend all this money on ever so many resources, and people just don't look at them. So that's what was happening there. And since she'd been there for years, like a lot of fraudsters, she knew the ins and outs of the system. So she knew that if she didn't buy the 12th edition of the book, but instead stayed with the 11th edition, no patron was really going to find out about that. So finally, what happened was that the auditors came in one year and they started finding that, well, through physical examination, books were on the shelf that had supposedly been ordered. So she was filing a purchase order from the library to the publisher, and then she would simply make up a receiving report that showed that that book had come in, and she was somehow making up invoices, although they weren't very careful always about looking at invoices before paying the bills. So sometimes the purchase order alone was just fine. So over the course of a few years, she made off with about $750,000 that way. So she definitely supplemented her salary. So we know she was doing it, but the pressure and incentive to commit it was gambling. So what happened was she was taking this nonstop flight to Las Vegas about once a month. And she would leave Indianapolis on Friday night and get out to Vegas very late. And then she had an overnight flight coming back, leaving Vegas very late Sunday night, like 11 p.m. And she would get into Indianapolis just in time to go to work. And she was at the branch library very close to the Indianapolis airport. So she had time to scoot into work. So she would go have one wild gambling weekend in Las Vegas and then come back and be a typical librarian again. But, you know, she really flew under the radar because who would think of someone like this embezzling money? But sure enough, she did. It's just like up the way on Oleander Street, less than a mile north of here, their former office manager, Judy Holter, who's still in prison, embezzled, I forget, it was $500,000 or $600,000. And again, she was doing it because of gambling addiction. She was the one that was going to the convenience store across from the library that's since been torn down, Stop and Shop, Stop and Go, or whatever it was. And that was her lucky store, and she was buying her lottery tickets then, thinking, of course, she would win it big. And, well, she never won it great big. But she won about $75,000 one time. Like a lot of fraudsters, she thought she'd put it back in the system. But guess what? She couldn't figure out how to get it back. Plus, that underlying addiction to gambling just didn't go away. So for about 3 or 4 months, she didn't buy many lottery tickets. So it appeared, because she wasn't taking a lot of money from the business at that time. But then once that stash of money was exhausted, guess what happened? She started buying lottery tickets once again on the company's dime. So she had a series of schemes going, including phony invoices, billing vendors who didn't exist. When checks would come in, she would deposit those into a fake bank account that she set up with, I think it was the forerunner of Truist, Sun Inc. I know that the business's bank account was Fifth Third because the business tried to sue Fifth Third. They recovered a little bit, but not much. So, she kept careful notes of everything. And the only way the owner would have finally found out was because he was running out of money. So he turned to her and, what is going on? She immediately handed him a yellow notepad and all the notes were there. So, still in prison, I'm sure, still wanting her lottery tickets. But like I think I may have told you one time, she had actually answered the phone a couple of times when I called there because I used the home for air conditioning. Oh, very nice. very efficient, etc. So she would have otherwise been a really good employee. She worked there for, I forget, 10, 12 years, something like that. She didn't start immediately. So like most fraudsters, she waited a while. So when fraud's discovered in a business like that, again, oftentimes that employee is long-term, it looks not the part. So the business is totally shocked by what's going on. So that's one thing that we see there. So there's that pressure. Now, there's also the opportunity to commit fraud. Most opportunities to commit fraud have to do with some sort of internal control shortfall. Something's wrong with internal control. It allowed that person to get by. So it could be that there is little or no internal control in the area. And Judy's case, it wasn't. Nobody was looking over her shoulder as they should do with internal verification. The owner certainly wasn't. Judy did everything. So no segregation of duties whatsoever. And it's different people doing different things. We know that we all see that. We'll see more about segregation of duties a couple of chapters from now. So nobody knew what was going on. Nobody was checking over her work. That's very, very common. In fact, it's very common to have someone in almost total charge of things, like an office manager, where again, no segregation of duties exists. The office manager is doing just about everything, can run the show as they like. She had the perfect opportunity. So we'll study more about internal control later, not in this chapter, but even though we have segregation of duties, two different people doing different things, well, those two could still collude and split the proceeds. So we'll think about that too. Like we always want one person doing record keeping or accounting, and a second person having custody of the asset, like cash. Well, if the same person keeps the books for cash, like cash receipts journal, cash disbursements journal, and they have custody of cash, that means they can steal some cash and cover it up in the books, no problem. Unfortunately, unless somebody is really doing very good internal verification. But when you think about it, most businesses in the United States are actually small businesses. And they're actually sole proprietorships for the most part, just like paint air conditioning is. I know on the back of their trucks it says since 1948. They've been around a long time. The guy that now owns it was his grandfather who started it. So here is a successful family-run business, but it was almost run to the ground by this fraudster. It truly was. So, well, the Payne family, good with air conditioning, but not so good with business. Do you think it's a common problem among small businesses? They're good in something. They're good in their area. Plumber, electrician, baker, running a bakery, whatever it may be. They're really good in the area, but they just don't understand business. So that's how they allow themselves, I'm afraid, to get ripped off. So for a small business owner like that, what I always recommend, if they cannot hire their own accountant or don't wish to, get a good CPA, not one from an overly big firm, by the way. They're going to get lost in the shuffle. But get a small firm and get to know and trust the CPA running that firm, or CPAs if it's a partnership. Often they're just sole proprietorships, and have a good relationship with them. Because that CPA can not only keep your books and do your taxes, but also give you a lot of really good business advice they've seen along the way. And after time, they almost become like them. You truly do. And some CPAs I know, they've had clients 20, 30, 35 years. So it's very interesting to see the relationships that do exist out there. Goodness, one of my former students, she's been in her current job partner since 1979, and which started when she was in high school. And she's had clients that she's had since shortly thereafter. So 40 plus year clients. So it's really amazing. And yeah, if a client finds a good CPA that they're comfortable with, they tend to stick with them. And then conversely, CPAs like her, who have had a lot of good experience out there and a lot of clients, they're able to fine tune their client base. And quite frankly, if client doesn't shape up, they ship out. And there's enough business out there. So yeah, one I'm friends with down in Venice, she brags that she loves her clients. And she's been at this again, 40 plus years, I would say. But she has such a great group of clients that, again, they're like family. She knows them really well. And for clients who weren't as good, yeah, she brags, she fired them. So bless her heart. And also, like her, how long do you think some CPAs go on? They don't retire so readily. So no need to. Maybe cut back on business somewhat. But yeah, as far as retiring a lot, I've known a lot that just kept kicking. Thinking one who died a couple of years ago until literally the day before she died. So she has sudden brain aneurysm. So, unfortunately, yeah, she was in her early 60s down in Miami. Well, so one going quite a while, and that's quite comforting to know. Then something else needs to be present is something called rationalization. So trying to explain what happened, obviously in a good light for fraudster. So rationalization. I didn't mean to do it. Yeah, I guess the devil made me do it. So most people rationalize that they're only borrowing temporarily from the company. Never mind that it was never authorized, but they're only borrowing temporarily from the company. They're going to put it right back. So just like Judy Holter over at Payne Air Conditioning, they can't figure out how to do that. It would look really weird for this big shot cash suddenly come in. But on the other hand, like I said too, that underlying reason, motivation, does not go away. It truly doesn't. So we'll see a little bit more about that later on. Let me stop sharing my screen if you're online and go back to my handouts. So as we look here again, incentive or pressure are committed, some opportunity, some rationalization, including attitudes toward things. Some people just don't have a lot of guilt. They don't have a very big conscience. And then some fraudsters seem to. But just like over at Southeastern a few years back, 4 or 5 now, when their director of development or vice president of development actually embezzled about $250,000. I'll tell you, his rationalization was just silence. He didn't say anything, or at least it was not publicly reported by Southeastern, but he just kind of went away, and I tried to find a trace of him, but I couldn't. He just kind of disappeared off into thin air, which is just what Southeastern wanted him to do. And I'm sure Southeastern didn't like it when the ledger broke the story. They would rather it would just be silenced because, as we know, how do other donors look at that? They don't. Not well. You know, gosh, our donations at work, look what this guy's doing. Or in the case of government fraud, well, our tax dollars at work. Now, by the way, one leader of a country who was extremely open that he was skimming was, for Fidel Castro, Batista. So Batista, the dictator before Castro, was in office, I don't know, about 5 years, I think. And the revolution was fought to get him out. In fact, he left Cuba January 1st, 1959, and at the wee hours of the morning, like 2:30 a.m., something like that. They flew, he and his wife, to the airport from, I forget the name of whatever the presidential palace is, if you will, in downtown Havana to the airport. So helicoptered them out, and they took off with 3 planes from the Cuban government. And it's still debated as to how much they had in gold going out. But Batista, he flew to the Dominican Republic because they let him in. And of course, the dictator there, what happened? Took a great big share of that gold. And other jewels, other valuables. But where he actually wanted to go was to Daytona Beach. He wanted to fly up there because he owned a house there. And President Eisenhower at that time would not let him in. You know, I've often thought, why didn't Eisenhower let him in, let his planes land, and then surround them by vehicles? That way they couldn't get away. And, you know, it just didn't happen. So that was a huge, huge blow to Cuba's wealth. But then how did they get all that gold? Well, he was very openly charging a markup, if you will, on various projects. For example, there's a tunnel right on the Malecon, which is the street that goes along the water in Havana. And it's a very famous street. You'd recognize pictures of it. But there's a tunnel under that, or I should say underwater at one point, and it goes down sort of a spiral as you go into it. It's quite famous. But at that time, about 1958, I think it was, it cost, I remember, $5 million to build. Well, he had on surcharge of $3 million. So he didn't try to hide it. I'll give him that. But yeah, obviously he was skimming and doing so very profitably. He certainly did not want to leave Cuba. And all the way until the end, he was acting as though he was still going to win this revolution. Well, no such luck. I forget when he died. It was mid-70s, I guess. His wife lived until mid-90s, and she kind of recovered her reputation, if you will, once he was gone. And she continued living in the house they had in Daytona Beach, although he was never able to come back. And she was a rather famous philanthropist here in Florida. But again, we know where she got the money. So again, the incentive, opportunities, attitudes, rationalizations. By the way, attitudes include one's character, set of ethical values. Some people just don't have a lot there. And also, people are often in environments which pressure them to rationalize fraud. Truly, we can pick on Enron for that. How much pressure do you think Enron employees had over them to commit fraud? A whole lot. Oh my goodness. Yes, if they didn't do it, they would get fired. So huge, huge pressure incentive to do so. And as far as opportunity goes, oh, please. Tone at the top of such, it was going to happen. So basically no internal control of that type of thing. Rationalization. Well, I was just doing my job. Lots and lots and testified saying exactly that. Now, number 4, I'll let you look at these when you have a chance. We can see examples of these risk factors in table 16.1, I'm sorry, in table 10.1 and 10.2 on pages 300 and 302 respectively. By the way, figure 10.2 on page 301 also portrays the most commonly cited fraud risk conditions. Very, very interesting to look at. So just have a look when you have a chance. And also number 3, see the interesting characteristics of fraud perpetrators in table 10.3 on page 301. So what kinds of characteristics, personal characteristics, do we tend to see? Quite frankly, you know, maybe everybody does have their price, but for some people that price is extremely, extremely high. For some people, extremely low. But at least I would like to think that most accountants have a really, really, really high price before they would start committing fraud. And I realize some of them. But I think on average, much more so than the average population. I mean, I truly do. Maybe that's sort of naive for me to think. I don't know. I really haven't seen a behavioral study about that. But that's just kind of, I guess. Yeah, again, maybe this is kind of naive. I tend to think that most accountants have the same attitude that I do. If an asset's not mine, I don't want it. I mean, I just don't have any conception of wanting it. I don't. Does that make sense? Yeah. Do y'all feel the same way? Yeah, I agree, Boris. Yeah, it's just, I don't know. It belongs to somebody else. I mean, and truly, a lot of people have that way of thinking. Now, that has been studied. But again, I don't know if accountants have a greater propensity for that or not, but at least I would like to hopefully think that they do. Yeah, it's not mine. I just don't want it. But then some people think just the opposite. Now, Roman numeral 2. We're all auditors. We also need to assess the risk of fraud. The higher it is, of course, the more audit work we've got to do. So in A, auditors must always maintain professional skepticism, which includes questioning mind and critical evaluation of audit evidence. So that misstatement that we see, we always think in the back of our minds, that could be due to fraud. Usually we can clear that very quickly. No, it's not. Most misstatements are certainly not fraudulent. They're innocent. But every now and then one is deliberate. And if it's deliberate, that's where fraud comes in. Now, sources of information to assess fraud risks include, well, communication among audit team members. They should share insight. They should brainstorm ideas. There are some factors in the middle of page 304 to take a look at. What may make fraud more likely, including a declining industry or a client who's in poor financial health, or if management seems shady for some reason, quite frankly. Well, then, number 2, also inquiries of management. So, when we think about inquiries of management, we're asking management, do you know any fraud that's taking place? And like I've told you before, our auditors always ask, here at Florida Southern, among the audit committee members, do you know of anything that might be going on? Sometimes they come around and say fraud, but Do you know of anything that's wrong that might affect financial statements, or trying to put it gently? And always no, I don't. Neither is anybody else. So we're really not a big problem here. By the way, with our audit committee meeting that we had on Thursday of last week, we did a couple of things. We went over insurance coverage, and we do have to do that. We have all kinds of different types of insurance here, including information risk insurance. So if we have a data breach, it's going to pay for things like to clear it up, of course, and also to pay for credit reports for people who are affected by that for a year. We, of course, have policies on many buildings around campus. Some policies are much more complicated and more expensive than others, including on a lot of the Frank Lloyd Wright architecture, because not only is it historically significant, but also how good is the construction necessarily? Not that good. No, he was a good architect, but not a good engineer, to be honest. Big difference there between the two. So yeah, we have that. We have insurance, of course, for student travel. There's another one. We have insurance because of the Roberts camp to help protect kids. So we touch on a lot of different types of insurance. And the other part of our meeting was that we actually had an information systems audit, and that was done by a consulting firm for information systems. And the partner was extremely impressed. So he said that we had some of the best results he's ever seen of the college. So that was good. And his background was accounting. He had been an external auditor for financial statements, but then he kind of migrated over to information systems and auditing those. Well, that's a natural fit for an accountant. So if we have great information systems, that says good things. Says probably our accounts are fairly stated, so that helps reduce the amount of audit resources. The auditors don't have to work as hard or charge as much. And of course, that means the great. We can get to the final draft of the financial statements without a lot of correction. It's nice not to have a lot of errors to worry about. So yeah, audit team always brainstorms everything they can, every possible type scenario. Then inquiries of management. Well, yes, we ask again, do you know of any fraud that's going on or anything that seems to indicate to you that fraud could exist? We also will ask management to back that up in writing in the client representation letter. Management writes it to us, the auditor, documenting very important things like we're not aware of any of the fraud. Very important, we'll say in chapter 24. And yes, I skipped chapters before chapter 24, so don't worry, we're not getting all those chapters in. In fact, we have a very manageable amount of material until the end of the class. Then, number 4, we also need to do some analytical procedures to identify unusual relationships. And these include detailed analysis of revenue, as fraud often involves manipulation of revenue. In fact, over 80% of fraud does, especially management fraud, because managers do certainly want to manipulate revenue. It's what drives everything else on the income statement. So if they manipulate that, obviously to make it higher, well, it reverberates all down the bottom line of income. That goes up too. In fact, the accounting standards require the auditor presume there's a risk of fraud in revenue recognition. So we have to be really professionally skeptical. By the way, 2 common schemes to do this are premature recognition of revenue or fictitious revenue. Fictitious revenue, that's just plain old pumping up revenue by generating phony customers and phony sales. As far as premature recognition of revenue goes, well, if there's some question, should that revenue, that sale, be recognized this year or next year? It happened right around year end, and maybe it's a little bit debatable. Maybe it even occurred across time zones at the stroke of midnight. Whatever happened? Well, when would you say the management, as we grow close to the end of 2022, would rather recognize a sale? Would they rather do so in 2022 or 2023 in most cases? 2022. Never mind that that's going to reduce 2023 revenue. But they're just not there yet. They're thinking. They're not that forward thinking. All they can think about is the immediate prize of pumping up revenue at the end of this year to get that last extra shot in. So, recognize it now. Well, another common thing they may do is that they have sales which are FOB destination. So title does not pass the customer until the good arrives at the customer's loading dock. That means later. It's the transit year end after fiscal year end, so the start of the new year. But some clients fraudulently may try and treat that as a sale FOB shipping point because it's shipped here in 2022. But in the act as though title passed in, but it really didn't pass until 2023 because it's not FOB shipping point, it's FOB destination. So it certainly does happen. And that final sentence here, the auditor must also document his or her conclusions about revenue fraud risk. Hopefully that it's low. Any questions so far in the chapter? Right. Roman numeral 3, we've got some corporate governance here. And we're thinking here about senior management, the board of directors, the audit committee, those people who really are charged with providing governance authority for the entity, guidance for the entity. So sometimes there are shortcomings there. And if there's shortcoming in corporate governance, well, we know what that's going to do. It's going to raise the risk of fraud. It certainly did with Enron before, what was his name? Can't think of the name of the CEO. Yeah, he was active in it, but who was really active was his CFO, Chief Financial Officer. So the Chief Financial Officer thought he was a hot shot by cooking up all kinds of different schemes to increase Enron's reported net income. And I say reported because that wasn't the real net income. And of course, once the real net income was found out by the market, what happened in their stock? Tanked totally. It had been a real growing stock at one time, but well, when it came crashing down, it was worth barely pennies. And it was very sad because a lot of Enron employees had all the retirement there. In fact, the rules of Enron required they kept a lot of their retirement savings in Enron stock. So a lot of those retirees lost everything. Maybe they got a few pennies back. Very sad. And just because they were working for an organization that had a lot of fraud in it, does that mean they were involved? No, no. By the way, does anybody know what Enron's stated line of business was? What they did for a living? Any idea? It was energy management. So what's energy management? I always thought that was weird before Enron was found guilty, even before they were accused. But I was never sure what energy management meant. And even after I read Enron's annual report one year, I still didn't really know. Well, in Enron's trial, that came out. A lot of people didn't understand it. I wasn't the only stupid one out there. But if a company has some mission that is not very clear, it's kind of murky, shall we say, that does mean fraud is more likely because they're trying to pull the wool over investors' eyes, basically. It's like, yeah, we don't want you to know what we're really doing here. So it's really bad. So if we look here in A, first of all, always bear this in mind. Management is responsible for preventing and detecting fraud within the organization, just like they're responsible for the financial statements. We always make that very clear because the auditor is not responsible. Otherwise, people think we are, and we're superhuman. Well, management should implement anti-fraud programs and controls to reduce fraud opportunities. Management should also communicate fraud detection and punishment policies to deter employees from committing fraud. They'll have them, of course, sign a code of ethics. They'll, among the principles of that code of ethics, they should always have in there that excuse me, that employee is not a related party to the company, except by being an employee. So, for example, their family doesn't own a major supplier of whatever that company uses. So here at Florida Southern, yeah, we do have a number of people on the board that have ties to companies which donate to Florida Southern, like Publix. Well, that's okay as long as it's disclosed. And any related party transaction we know, the auditors do look at those carefully. But in general, Publix donate money to us, well, it's on the up and up. So that's pretty easy to prove. But they just have to go through it and document it. And we have someone from Publix on the board, as we often do. They've got to make it clear when they sign the annual code of ethics form that we must sign, that they are a related party, or at least, shall I say, related to a related party. So kind of indirectly. But full disclosure, everything is on the up and up, and we're okay. Now, bringing on it's more effective to focus on fraud prevention and deterrent. And deterrence. Okay, yeah. Okay. Fraud prevention, deterrence. In other words, nip this thing in the bud. We're not going to tolerate fraud. That's an important message. And we're going to find it as quickly as we can. We're always on the lookout, and we'll fire the people involved, basically. Well, management should implement anti-fraud programs and controls to reduce fraud opportunities, again, like communicating what's going to happen if somebody is involved in fraud. And management should also communicate fraud detection and punishment policies to deter employees from committing fraud, so don't even think about it. And then B, management should promote a culture of honesty and high ethics. Really should always emphasize that, like in firm training. Certainly we do here at Florida Southern. Well, the most effective way to prevent and deter fraud is to implement anti-fraud programs and controls which are based on core values and embraced by the organization. So here, just like the cornerstone, sure, those are our core values, and we all need to live by those values, basically. So that's communicated to employees very, very well, in fact. Well, most effective way to prevent and deter fraud is to implement anti-fraud programs and controls which are based on core values. Like I said, we certainly do here. And those reinforce acceptable behavior and expectations, which employees can use as a guide to their actions. And creating a culture of honesty and high ethics is going to include the following. So what should we always emphasize within the organization? In communications to employees, what do we emphasize? What do we reward in their behavior? Well, setting a good tone at the top is one. Here at Florida Southern, we have a great tone at the top. So tone at the top, starting with President Kerr, and everybody else, like her vice presidents, yeah, they are extremely committed to doing a good job. They're extremely hardworking, extremely honest, etc. So, you really have to hand it to them. You truly do. And again, our auditors comment on that. It's a major thing for them. I think probably about their favorite audit, by the way. They always love coming here. But yeah, there is a great tone at the top here. Truly is. And it's kind of like, well, who on earth would ever want to go against that tone at the top? Wouldn't they be ashamed? But granted, some people have no shame, are very low. And even though perhaps, well, I don't know that many people would disagree with this, would you say that being a Methodist affiliated institution helps out too? With a good tone at the top. Very much. Very, very, very much. I truly think that. And by the way, we're not owned by the United Methodist Church, but we're affiliated with it. So it means they started us out. And even though the relationship's more distant than it used to be, a long, long time ago, we used to be a Methodist seminary, but the Methodist Church is still a big part of our lives here, shall we say, and get lots of donations from Methodists. Not that many students, surprisingly, but a lot of donations from Methodists. So, like I've said before, most of the big donors for the Methodists are Jewish. But in the end, do you really feel like it's private school when you come in each day? I'm sorry, do you really feel like it's a religious school when you come in each day? Yeah, me neither. It's just private school with some very nice values. And I think we all agree with those values or we wouldn't be here. Well, then something else in number 2, creating a positive workplace environment. This includes a whistleblowing process. So if you know if something is wrong, blow the whistle. But for a lot of frauds, yes, there's been a whistleblowing process, but the employee who had some information reported got in trouble. That happened at Enron too. So not good. No, what an organization must have is an anonymous whistleblowing process and no retaliation. We have one here, and obviously for audit committee members, we can tell the auditors directly and without President Kerr being present in the room. She's not supposed to be. So we have absolute freedom to say, or we could contact the auditors directly, but to my knowledge, no one ever has. Really haven't. We might say things like, well, on the business side, Terry Dennis, who does so many different duties, we sure don't want to lose him. So we think about continuity issues, and those did come up the other day, but that's not a slam, excuse me, at Florida Southern in any way. And it's a very common problem in a lot of organizations. It really is. Somebody's been at the job for a very long time, and we're getting to be a certain age. And how easy is it to replace those people? Not very. Terry's been in this job for like 30 years. Well, then number 3, hiring and promoting appropriate employees. employees. So yes, we make sure people have proper qualifications when we hire them, proper training, proper education, etc. And we don't promote them until they're ready. So they have to show aptitude. They've got to go through some training generally, etc. Have some years of service. And by the way, number 4, we need sufficient training. That's often a problem. If employees are trained, often the training is not nearly enough. And we've all been, shall I say, victims of employees who have been that way. For example, the server in a restaurant that is just really rude. It seems like they would rather you weren't there, and any request is just such a burden. Has anyone ever had a server like that? Yeah, that'll ruin a restaurant very quickly. Yeah, I don't know if anybody's ever noticed this on South Florida. There is a restaurant. It's south of Lake Miriam Publix on that same side of the road. And it's called Freddie Mac's? No, not Freddie Mac's. Something Louis Mac's. Has anyone ever noticed that abandoned restaurant there that has vines all growing over it? No. Well, it closed probably about 2014, I would say. And I went there one time when I first moved here to Lakeland, and it was okay. Wouldn't say it was anything to write home about, but at least it was an independent restaurant. But then after that, service started falling apart, and had some friends who were in town, and we decided to go there. And I remember the hostess just standing there. So she finally said, "I'm gonna go up to the bar." So we did. And in there, they wouldn't wait on us. And the bartender acted like it was a real burden. Didn't want to even speak to us. So we complained to the manager. He said, "Oh yeah, I know. We've got all these problems with our employees. Have a free drink on us at the bar." And the 3 of us said, "We really don't want to, because what were we thinking of the bartender doing? This nasty bartender. Think gross. Spitting in our drinks." Yeah. So we said no. And they said, "Oh, come back and get it. We'll make it up to you." But do you think we ever did? No. Besides, none of the 3 of us really drank a lot of alcohol anyway. We just thought it'd be kind of nice to go into this, what at that time looked like a pretty restaurant, and go up to the bar, and the bar was very pretty. But online, there were all kinds of horrible reviews that started happening about Louis Mac's, and other people had suffered the exact same treatment by the employees. And it somehow hung around for a long time. They must have been sitting on a big pot of cash, but they finally went out of business. And we wondered why. When we walked in, there weren't that many diners there. And we couldn't imagine why nobody was there to wait on us. And it certainly wasn't that busy, but they just had an attitude, shall we say. Plus, quite frankly, I know this happens. It was, well, in stay a fairly nice restaurant. Unfortunately, given, well, in South Lakeland in this case, the rather above average economically patron who was there, some of them have some extra money. What might they buy from a server? Think servers are just getting tips? Hopefully most are just getting tips. You know what they're buying? Actually, there have been a number of busts. Some servers steal drugs. So, we think about drug users. Oh, they're in the bad areas of town. They're on the streets, etc. And many are, but not necessarily. Not at all. So Yeah, that does happen. Yeah, back in my previous school, I had a student who did turn out to be a drug dealer. He was arrested right after he graduated. And I remember he used to be a server in Sarasota. So yeah, he had wealthy people there, obviously, who were diners. And I always just wondered, how much of his customer base was that? Well, then number 5, also need periodic confirmation from employees. We're not committing fraud. We have to sign off, as I've said, on a form about that and about related parties every year. And then discipline for those who do commit fraud. Otherwise, people think, nothing happens, I may as well do it too. Well, let's see. Management's responsible for fraud as well as evaluating fraud risks that occur. You've got to do so on an ongoing basis. Because after all, the risks of fraud can change. So if that company's declining economically, yes, much more likely to have fraud. And in fact, William Max, it was certainly declining economically. And maybe that's one of the reasons the bartender didn't want to bother with us. We didn't look like customers, I guess, who were going to spend a lot. Instead, that person wanted customers who were, well, I guess we'd say, feed the piggy bank better. I don't know what it means, but it was very strange. And I think he was definitely on the tape too. Now, I make that assumption, but is that a reasonable assumption for a bartender? Think about it. It's not unreasonable. No, often a lot is in cash, especially because some people don't like to admit they drink as much as they do. So instead of writing a tab and putting it on their credit card, they just pay cash with every drink. And after a few drinks down, do you think everybody's paying attention to how much they're spending all of a sudden? No. So the bartender can get by, not bringing some drinks up, bypassing internal control, in this case, cash register that way, and just skimming, lining their own pockets. And yeah, that's really common in cash businesses. And the IRS knows that. So the IRS takes a very close look at anyone involved in a cash business, like a server, like a beautician. There's another one, big cash business. And yes, they are very, very prone to getting involved. IRS looks for professions and picks out a very high percentage of them to audit every year. So, wow. Again, management's responsible there, and that includes taking steps to reduce identified fraud risks as well as monitoring. Management's got to stay on top of everything, monitor that internal control, and that helps prevent and detect fraud. And fraud cannot occur without a perceived opportunity to commit and to conceal it. So management should do some of these things, in fact, hopefully all of them. Well, identify and measure fraud risks. And management needs to recognize that fraud is possible and could be committed by virtually all employees. And as it turns out, well, a lot of businesses don't like to think about that. Mr. Payne up at Payne Air Conditioning certainly did not like to think about his very valued and much loved, quite frankly, office manager as doing something like this. It's uncomfortable. Another place where it's very uncomfortable is within religious organizations. So over at Southeastern, not only were they not wanting to impact their reputation among their donors, but they didn't really want to think about one of their own as committing fraud. It just seems so against the religion, shall we say. It really does. I mean, at least there were fraud in my synagogue. Yeah, I'd be very upset too. And I question, why am I donating here? I can certainly see the motivation. I'm just donating to get a certain percentage of my donation dollars siphoned off. Now, when you have a chance, just glance figure 10.6 on page 310, impact of anti-fraud controls on fraud deterrence. Well, then number 2, management needs to mitigate these fraud risks. For example, like with cash, going back to there, very, very high inherent risk. And as it turns out, management needs to mitigate that high inherent risk by very low control risk. Have really good internal control over cash. That way, when we multiply inherent risk by control risk, we come up with the risk of material misstatement. We want that to be as low as possible. Well, then, number 3, monitoring fraud prevention programs and controls. And that's particularly important for areas with high fraud risks. And this can be assisted by an internal auditing function. That's a really good use for internal auditors. So monitoring fraud, for example, internal auditors tend to be very involved with all areas relating to revenue and cash for obvious reasons. Then number 4, just like here, at Florida Southern Audit Committee oversight. And the Audit Committee has responsibility for overseeing the organization's financial reporting and internal control processes. And should consider the potential also for management's override of internal control. Because we'll see in our chapter on internal control, if we get to a high enough level of management, you've probably heard this before, management can override the normal internal controls, taking advantage of their spot high up in the organization and kind of do what they want and conceal it, usually in a very sophisticated manner, as we know. I guess President Kerr could do that if she wanted to, but trust me, she doesn't want to. I mean, well, obviously we know what kind of sanctions it would be. But the second thing is, like us, she just doesn't have an interest, just not a part of who she is. And I'm firmly convinced that people either have it in them to steal or they don't. It's just black and white. I mean, it may require a different threshold level to trigger it in some people. But at the same time, I think we get to a high enough threshold level. I hate to say it, but it could be that everyone has a price. So as an organization, we avoid placing employees where they would be tempted beyond their price, shall we say. Any questions so far, by the way? All right. And going to T. Well, the auditor's responsibilities to the risk of fraud involves 3 levels. First of all, overall responses. In other words, the overall financial statements. Overall risks, like, again, worsening economic conditions in the organization. The second, responses at the assertion level, so dealing with individual accounts like cash, high inherent risk, and responses related to management override of internal control, because again, we always bear in mind that that can sure happen. So first of all, this isn't surprising. Overall responses to fraud risks include a focus on increased fraud risks in certain areas like cash. But auditors should discuss relevant facts with management and obtain management's views of the potential for fraud and to gain insight on existing controls designed to mitigate the possibility of fraud. An auditor should consider whether exercising controls really does decrease the likelihood of fraud and whether any deficiencies exist. So is there something they could tighten up here? Like internal control over cash isn't so good. Let's get more strict. Well, more experienced audit staff may need to be assigned to the team, including a fraud specialist. That's another thing that a CPA firm can do. They can have a fraud specialist, not necessarily an accountant. But yeah, if you're suspecting fraud, you need good people to deal with it. So professional skepticism should be ramped up, obviously, be even more questioning. And auditors should also consider management's choice of accounting principles, especially those which include subjective measurements or complex transactions, because these make fraud a lot easier to commit. So let's just baffle people. Oh, if you can do that, you have a bigger smoke screen to hide behind. It's just like Enron saying their mission was energy management, whatever that was. Somehow they got paid for it, I guess. Oh. Well, then auditors especially need to examine revenue recognition policies. As we said, the one biggest common denominator in lots of frauds, revenue. Sure, everyone would love to make it higher. They truly would. Automatic increase there in the financial statements and in the balance sheet too, indirectly, like your accounts receivable. Now, since fraudsters are usually very familiar with accounting policies, like they may have been there for years, like Dewey culture, well, auditors should incorporate unpredictability in their audit strategy. An auditor should also include tests which address misappropriation of assets. We're looking for somebody stealing assets, which is what misappropriation means. Stealing, defalcation, embezzlement when it comes to cash, theft, all those are the same thing. So yeah, management always seems, or rather auditors and management for that matter, always seem to think somebody could be on the take. You just never know. And even though they look good, well, looks can deceive. Now, if we think about responses to fraud risk at the assertion level, we're talking about individual accounts. Well, they include audit procedures to respond to the specific fraud risks related to the account under audit and the type of fraud risk identified. And the auditor may need to change the nature, timing, and extent of audit procedures, including increasing sample sizes. Because if we think an account is more likely to be subject to fraud, we've got to work harder. Got to take a bigger sample size to really get those bugs out. Otherwise, we don't think there's a very high risk of fraud, and we'll sample, but not as big a sample to test. Well, then number 3, responses to address management override of internal control include recognizing that management can almost always override internal control, and therefore is in a unique position to commit fraud by overriding controls which are otherwise operating effectively. Everything might be just fine. Well-designed internal control. All the lower-level employees are following internal control procedures. But surprise, surprise, management's overriding them. So naughty behavior up toward the top of the organization. Unique position. So here's some things the auditor should do there. One thing to do is to examine journal entries and other adjustments for evidence of possible misstatements due to fraud. Management or fraud often results from misstatements to adjustments to financials. And this is especially true of so-called top-side adjustments made by management. So-called top-side because, again, somebody up top in the organization made them. We can even think about top-side adjustments. They tend to top off, if you will, reported income too. And we know management would love to do that. So these so-called topside adjustments. First of all, let me ask, how confusing can adjusting entries be to start with? Very. Back when I still taught principles of financial accounting, I used to hate it when it came around to teaching adjustments, adjusting entries. I knew that a very high percentage of the class would never understand it, no matter what I did. Of course, I had lots and lots of non-accounting majors there too. But sometimes I'm not so convinced all accounting majors really understand them that well either. So again, if you can baffle someone with something they don't understand, ever so much better. So with these topside adjustments made by management, if they're fraudulent, they tend to be very complicated. And again, they increase reported income and reported assets as well in the end, making the financials look better. Well, then in B, should also review accounting estimates for bias. You know, accounting is not that cut and dry. There can be a lot of subjectivity. So like estimated residual value, estimated number of years of service, useful life. Those both affect depreciation expense and also net assets. Well, those are very attractive to a fraudster on the management team to manipulate, doing whatever is necessary to, again, increase revenues and decrease expenses. So in the case of depreciation, let's decrease that to increase reported net income. Well, they might look at a longer useful life for the asset. They might look at a higher residual value for the asset, salvage value. The reason they're doing so is to try to reduce reported net income in the year ending. Truly are. So reviewed accounting estimates for bias. And again, as we know, management always has motivation to overstate assets and revenues and to understate liabilities and expenses. And fair values of assets also represent an area for deliberate misstatement. Which would you say is more cut and dry, more precise, shall we say? Would you say it's the historical cost of an asset or the current fair market value of an asset? Historical cost. Fair market value, much more subjective. Especially if you think about this, the values in IFRS, 3 different ways to do fair value. It is subjective. The historical cost, it's not. Let's see that receipt, even if it's from years ago. Well, that's one of the major reasons, quite frankly. The US GAAP is always stuck to historical costs, trying to eliminate bias. So, with estimates, yeah, there's a lot of subjectivity. So when it comes to the fair value of an asset, does management usually want to oversee it or understate it? Obviously, overstate. There may be ways in which they can. Just to let you know. Well, then C. The auditor also needs to evaluate the business rationale for significant unusual transactions. Oh, significant transactions, they're big, they're unusual. That just might be fraud going on. Because after all, fraud is not a usual run-of-the-mill routine transaction. It just isn't. So look at those big things that jump out at you as an auditor. So look at those journal entries and other adjustments for evidence of possible misstatement due to fraud. And fraud often results from misstatements and adjustments, as we said, to amounts in the financials. Oh, what am I doing? Pardon me. Sometimes this all runs together. I've been over it so much. Okay. Going back to C. So again, we're evaluating the business rationale for significant unusual transactions. So these just don't pass the sniff test. And the auditor should determine that the accounting treatment is appropriate. Yeah, they used appropriate GAAP. And that the related information about the transactions discussed in the financials. Got to. Interested readers want to know. And they also help to take away the possibility of management successfully committing fraud because it's been highlighted in the financials. Otherwise, such transactions could be a vehicle for fraud. They truly could be. And certainly a significant or big, strange looking adjusting entry also falls here under C. Well, then here in D, auditors should also be alert for first volume discrepancies in the accounting records. The books don't balance. Things look strange. Or we see all kinds of purchase reports where the quantity of goods received is less than the quantity ordered. What would that indicate? What could somebody be doing at the loading dock? Yeah, stealing. Again, the proverbial case of backing their pickup truck there at the loading dock and blowing up on this spare merchandise, shall we say. Now, it happens, certainly does. Well, number two, conflicting or missing audit evidence. Oh, they don't want to show you the real thing there. So as an auditor, you start getting suspicious. Or number three, any problematic or unusual relationships between the auditor and management. Generally, management is stubborn. They don't want to reveal things because, again, they don't want to tell you what's really going on. They might say, no, you can't look at those documents, like we've seen before at homework. Or number four, results from substantive or final review stage analytical procedures vindicated pervasively or previously rather unrecognized fraud risk. Gotta go back. Look at things again from the auditor standpoint. And any responses to inquiries which are vague or implausible or which produce evidence which is inconsistent with the other information. So, you know, this employee, they seem nervous. They don't have very good explanations, not well thought out. Those are indications, could be fraud going on. Even if the employee is not committing it, they may know of the fraud. So what questions do you have there so far? Anything? Okay. So when we come back on Wednesday, we'll finish up this chapter here. We don't have a whole lot. And then we'll get into chapter 11, which is about internal control itself. And not too bad a chapter, not too terribly long. And then in this handout file, last one, there's going to be chapter 12, just kind of a unit here all together, which is why they're in a separate file. I'm sorry. Oh, I thought somebody said something. Okay. Well, if you do think something, let me know. And otherwise, have a good one. See you back on Wednesday. Bye-bye. Hey there, Boris. Oh, no, it's not. I'll postpone that. I'll send an email to class.
Question.
Of
Do you know
course,
anything
of
about
course.
the MBA program, for this one?
Yeah. What do you think of the MBA instead of the Mac?
Just because I feel like an MBA would be more beneficial for me if I go somewhere outside of America.
Okay, I've had lots of international students who got Macs, did extremely well. It's up to you, but your overall career opportunities will be greater with Mac, and your overall earnings will be too, I guarantee.
Okay.
Yeah, you're a much rarer type person and someone who's really in demand. Quite frankly, there are ever so many MBAs out there that can supply and demand.
No, I was just some question like if I decide to actually engage with now when I want to start next new year. I'm presenting my junior year right now. If I want to start like closest to my next year, fall semester.
It's not too early to contact Emily Lowers
Okay.
and ask her.
Okay.
Okay, good.
Yeah. Thank you.
Yeah, she'll definitely know. Quite frankly, the official dates they have. You can, after those,
Yeah.
there's no problem. with
Oh,
Small
okay.
schools.
Okay.
Yeah, it's not really formalized, even though you'd like for people to think it is.
Okay. All right. Thank you very much.
Anytime for us. Take care.